Good morning from Westpac and welcome to another Finance AM podcast. I'm Ray Spicer, Westpac market strategist. In the financial markets overnight, we saw the risk-averse mood of the past week extending. US equities falling to one-month lows, with the S&P 500 down 0.6% on the day so far. That risk-averse mood weighed on risk-sensitive currencies and bond yields, with bond yields also affected by an underwhelming US inflation report. In the currency markets, the US dollar index is unchanged on the day after briefly falling post-CPI, but then recovering back again as those equities fell. And that, of course, supported the defensive US dollar. The Aussie dollar fell from 73.40 to 73.14 via a brief spike to 73.69 post the US CPI report. And the Kiwi, it fell from 71.25 to 70.84 via a brief spike to 71.51. The Aussie Kiwi Cross fell to 102.97, and that's a low since April of 2020, before recovering slightly to 103.28. In the interest rate markets, the US 2-year Treasury yield fell 2 basis points to 0.2%, and the 10-year yield fell from 1.35 to 1.26%, down 9 basis points, with a combination of the CPI report and falling equities weighing on those bond yields. Australian bond yields did also fall. The 3-year yield overnight down 2 basis points to 0.22%, and the 10-year yield down 6 basis points to 1.2%. Commodities, Brent crude oil up just 0.1%, copper down 1.2%, gold up 0.6%, and iron ore down 1.6%, down to $120, making a fresh 10-month low. Now a bit more on that US CPI inflation report. It was for the month of August. It was slightly weaker than expected, at 0.3% gain for the month versus estimates of 0.4%. And although the ex-food and energy measure, that missed by more, with the monthly gain only 0.1% there against expectations of 0.3% gain. Put all that together, one interpretation is that supply chain disruptions may be starting to ease the pressure on inflation. On the day, what's out that could be market moving? Not too much going on down under, in a market moving sense at least, but we get to China and we get their monthly big batch of major data for the month of August, including industrial production, fixed asset investment and retail sales. We've seen COVID and regulatory reforms weighing on growth there recently. Let's see if that persists for the month of August. And then up to the US tonight, we'll get industrial production for August. I think that'll be the main market event on the day. Well, that's it from me today. Thank you for listening. I'll be back again same time tomorrow morning.